Welcome to the Mortgage Warrior podcast featuring Steve Dostal. Host Darryl Smart chats with the Mortgage Warrior about his no BS approach to financing. That will be sprinkled in with conversations with other people in the business and around the community. So without further ado, here he is, the Mortgage Warrior, Steve Dostal. What is up, everyone? I am Darryl Smart, and this is my buddy Steve, the Mortgage Warrior, Steve Dostal. How's it going for episode number 2? We had survived episode 1. How's it going?
I didn't see any negative reviews yet, so obviously we gotta be doing something right.
And we didn't get yanked off the internet, so I guess that's a good thing.
There was no swearing, so that seemed to be a bonus.
So no swearing.
No swearing.
No swearing.
If you do, we'll beep it. It'll be funny, right?
We'll just hit that button.
Yeah, absolutely.
So what did you think of that first episode?
You know what? I had a lot of fun with it. I think that, going back and forth is fun, having that conversation and not having anything scripted. Yeah. Although you have some questions there that are scripted for you.
Yeah.
What I'm doing is not.
This episode is brought to you by Elevation Home. Design, build, and make your home look amazing.
If you bypass all the rugby hits and hockey hits and, you'll eventually get to the knowledge.
Well, I was going to say, I guess the puck hits to my head. I need cue cards for everything now. Everything's stored up there. So
Absolutely.
So you have a money tree here, right? You were just talking about that.
Yeah.
You want to tell everybody about this money tree?
So the money tree came in from a friend of mine, a close friend of mine, passed away from cancer, and his wife Lisa owns a company named My Painter. Yeah. And Mike and her came in and did all the painting in my office and put got rid of the big lights and fixed the ceiling and stuff like that. And as a gift of her appreciation, she gave me a money tree.
Pretty appropriate.
Pretty appropriate since we're, that's all we do. We give money out to people, right? So,
good thing it's growing.
Thank God it's growing. I mean, some leaves fall off here and there, but I mean, it still seems to be going in a way that's positive, right? So,
does it turn into money? Do the leaves actually turn
well,
into
I mean, my father used to say to us back in the day, you should go out the back in the tree if you want some money because then it ain't in my wallet. So, that used to be one of my dad's favorite sayings. That and taking his wallet, asking for $5 back in the 80s, and he would blow in it and turn it upside down and, there'd be no money in it, right? So,
I know that one good.
Yeah.
So today we're going to talk about the market. I know because last week was the introduction, and then actually when they have the recording, there was some big news that went on with the market. So you want to elaborate on that a little bit?
Well, yeah, they had a Bank of Canada did a rate increase of 0.5 point. So now our prime went from 3.2% to 3.7%. So what that means, if you have a variable rate, that means your rate went up 0.5 point. So does that mean that it's the end of the world? No. What it means is that a lot of people are really sensitive to rates now because they've been so low for such a long time. And now all of a sudden the reality hits in that we have inflation and we have a war in the Ukraine. And so what's happening is that, we're raising rates because we have to combat the inflation, which means they have to raise rates somewhere, which is our credit cards, our lines of credit, and our mortgage payments, right? And even cars too. So cars are even subject to the rate increase. One thing I can suggest to people though is that if you're really worried about the market and you don't really like a variable rate, take a 1 or 2 year term. Yeah. Because then you can evaluate your situation and the market situation within that year or even the 2 year term. So if you take that 1 or 2 year term, you're going to alleviate the stress that you're going to feel if you think the government's going to continue raising rates.
So there was a lot of chatter about this, and it almost seemed like a lot of people were hitting the panic button. Almost, should they be hitting the panic button, or what? What should people be doing?
I wouldn't hit the panic button yet. I mean, again, I'll reiterate it back to the first episode. I was giving out 4.79% rates back in the day. And now that they're back at that or even higher, well, I mean, again, people still pay money for the gas that you need to get to point A to point B. So you're going to have to pay the piper at some point if you own a home because you're going to be up for renewal. And they're going to offer you a renewal rate that you're probably not going to like. Mm-hmm. But doesn't mean you can't shop that around. So if you're an existing client or if you want to be a new client, reach out. Reach out to whoever you deal with the mortgages, like, your bank, like your friend who, could be a mortgage broker. I don't know. There's a lot of options out there and there's a lot of knowledge out there. You just have to kind of figure out where to look for it. And the best place to look for it, in my opinion, is obviously go to themortgagewarrior.com.
Well, and that's what, and again, it's one of those things where there's so many different options out there, and what do you offer that other people don't? And that kind of ties into episode 1, but it's more of a relationship, and I think that's something that you kind of specialize on, right?
For sure. I mean, you get to work with me, you get to work with Victoria, you get to get emails answered by me. I answer my phone. If I'm not here, I call you back. I mean, at the end of the day, there really isn't much of a difference between the products we can provide people. Yeah. It's about the knowledge of those products to provide those people. So I have to do my own due diligence in the background to make sure I know, what kind of rates, what kind of products, whether it's self-employed, whether it's, job letter pay stub people, whether it's part-time, if you've been with the same company for more than 2 years, I can use a 2-year average. There's a lot of different scenarios that come involved when it comes into, getting a mortgage. So would I say that I'm the best guy out there? Well, I mean, I pay for 3 best rated to say I am. So I guess, that's a joke, though. I don't pay them. Unlike other things that are out there, you can pay to say you're in the top 1%, or you can pay to, say that you're, Brantford's best realtor. But again, proof is in the pudding. Proof is in data, which, realtors have to deal with. Mortgage brokers have to deal with. So, poking fun at my realtor friends. I mean, it's a whirlwind of a market out there for them. I mean, we had such low inventory all the way through Christmas and all the way up until, the war in Ukraine. And then all of a sudden now, we're getting listings, but a lot of people are, canceling the listings and relisting them at a price that they really want versus, trying to hold these offers and so on and so forth.
Well, and again, that's one thing that I've noticed. And again, my wife is notorious for having her phone out. It doesn't matter where we are, and she'll look at real estate. And that's the thing that we've noticed is the prices have gone down. But back to this market business, and again, my wife's the one that handles it, so I'm learning from you. Who does it affect, or what is it? How does it affect you?
Well, it affects us because people are going to be in a hold pattern right now because who wants to renew right away or even refinance right away when you know that you have like a 1.99 rate and you know that you're going to be stuck at like 4.5 or whatever it is gone up to? Because I mean, we just got emails in this morning that rates have gone up again from all the major lenders, right, and B lenders. So for us, it's just a matter of you just have to do your due diligence here. Mm-hmm. You got to talk to the right people. Your lawyer, your realtor, your home inspector, your appraiser, and obviously your mortgage broker, right? So, I mean, if you put together a good team of people that can influence you and show you what you're doing right and what you're doing wrong, then at the end of the day, we're achieving the goal here, which is either home ownership or, refinancing you to get you out of a tight situation. You could owe CRA, you could owe, your line of credit could be maxed out because you had to, put on a new roof or whatever, and you weren't expecting it. And those payments now, because of the rate increase, have gone up significantly considering, when you had it at the beginning.
So there is no real one answer for everything. It depends on who it is, I guess.
Yeah, every mortgage application is different from the other, right? Yeah. Like you have a different situation because of what you do for a living versus, Joe Schmo who works at Toyota and, is making his $100,000 a year and getting his 50 hours a week, right? Like it's all subject to credit. It's all subject to your income. Is it provable, right? Provable meaning that you pay your taxes on the money that you earn, right? So one of the things I've learned and what I try to tell people is that if you don't want to pay your income tax on the money you actually earn as a self-employed person, you're going to pay the piper on a B lender, right? Because you don't have that provable income. You're going to need 12 months business bank statement showing a good amount of deposits in there, basically everything you earn, what you show on your business affairs on your T1 generals.
Yeah.
But at the end of the day, again, it all starts with the application. Go to themortgagewarrior.com, fill it out, and then our job is to look at what we can get you.
And so this episode should be called Paying the Pied Piper.
Paying the Pied Piper.
Paying the Pied Piper. So just in terms of trends, and like you said, it's already gone up. What do you see? And I know you don't like telling the future and kind of prognosticating things, but what do you kind of see? Or what have you seen in the last week, especially because obviously it went up already within the 7 days that we've seen each other?
Well, again, there is a little bit of a panic for some people, but a lot of people are hurting right now if they bought back in February or March and now they're trying to close it now, thinking that the market is going to continue to rise. The Canadian real estate market is never going to go down. Well, guess what happened? It went down.
Yeah.
Right. Again, I don't predict this kind of thing because it's hard to do it because,
Yeah.
Who would have thought that, before the pandemic, they raised rates a couple times.
Yeah.
And then the pandemic hits and they drop a rate back down again. Now we're through the pandemic and now we're back at, where there's inflation and a war. Mm-hmm. So now they're jacking the rates up again. So for me, all I can say is that, again, do your due diligence and get the education that you need in regards to what you want to do, and allow us to do our job as a broker to facilitate the mortgage as best suit your needs.
Awesome. Well,
I guess it's a wrap for number 2.
I think episode number 2 is a wrap because you answered every question on the cue card in the first 5 minutes, I guess. So
yeah.
I guess you're off the hook. So
off the hook.
I guess number 2 in the books.
Number 2 in the books.
And thanks a lot for joining us, and we will see you next time.
This episode is brought to you by Elevation Homes. They will design, build, and make your home look amazing.